Warren Buffett. He hasn't been doing a hell of a lot these last few quarters. If we look at his latest 13Fs, there hasn't been a lot of moves. He's been trimming a few positions, he's been adding to a few positions, but there hasn't been any big acquisitions, despite sitting on almost 150 billion in cash. But there's one thing that he has been doing, and that's buying back a fair bit of stock. So that's what we're going to be breaking down in today's video, how much stock Buffett's been buying back within the portfolio. And we're also going to have a quick look at Li Lu's latest 13F, as there's one little thing of interest on that as well. So with that said, let's crack straight into today's video. So Warren Buffett has actually spent more buying back Berkshire Hathaway stock over these last 3 years than he has spent on his entire stake with Apple, which is the biggest position within Berkshire Hathaway's portfolio. Berkshire has spent nearly 20 billion more repurchasing its own stock since the middle of 2018 than it deployed accumulating its Apple stake. So over the last 3 years, Buffett has actually piled more than 51 billion back into Berkshire Hathaway, which has been great if you're a Berkshire Hathaway shareholder. We can see that he started buying shares back in Q3 of 2018, and he was slowly drip feeding them throughout 2018, 19, and then in 2020 of Q2, we saw him really starting to deploy the capital back into the company. Even up to the most recent quarter of Q3, he's still been aggressively buying back stock. So there's a couple of different scenarios here. The bull case would be that both Warren and Charlie see Berkshire Hathaway currently has been under intrinsic value. We've heard in previous chats where they sort of stress their importance of share buybacks, and they discuss it quite openly where they think it's a good idea sometimes.
Over the weekend, a lot of questions came up about share buybacks.
Yeah.
People were asking specifically about Berkshire. Why don't you buy back more shares of Berkshire, especially when you have $110 billion in cash on hand? What's your answer to that?
Well, we will only buy Berkshire if we think that the shareholder the next day is, or that same day, is wealthier after we've bought the stock. In other words, we bought it for a shade less, or maybe a lot less, but at least a shade less than it's actually worth. And we don't set out to buy any given amount. We set out to buy stock at prices below intrinsic value per share. Now, intrinsic value per share is not something that is precise to the penny or anything. It's probably a band of 10% or something like that. And my partner, Charlie Munger, if you asked us to give you a slip of paper with intrinsic value per share on it, it would not be the same figure, but it would be close. And we both would have a band or something of the sort. If you're buying it below that figure, you know, if we've each got $1 and you'll sell me, and we put it on the table and you can't reach it for a while, you say, well, I can't reach it, so I'll sell you my share for 95 cents. I'll give you 95 cents. You know, if you say $1 too, you know. So no dice. So it's not complicated. It may be beyond my ability to figure out the intrinsic value of certain kinds of businesses. But with Berkshire, I've got a reasonable idea, and I try to give the shareholders the same information that I regard as important in calculating that. Now, it can change. Presumably, you want it to change upward over time because we retain earnings and we should be building more value.
So that could be one option, and they also think the future outlook for Berkshire Hathaway is looking very good, and they think it's a good use of that capital. Now, the second option, which is a bit more of a bear case, would be that they're struggling to find other positions to put that capital to good use, and they only see this as the only option that they have at their disposal at the current time, where markets are at all-time highs. One more quick thing before we wrap up today's video is I want to have a quick look over Li Lu's latest 13F for Q3 of 2021, where we've seen him buy into a new position, that being Berkshire Hathaway. We can see that his recent position that he brought within Berkshire Hathaway makes up 11.41% of Himalaya Capital's portfolio. So it's a very large position to be held within the portfolio. Now, this is only just recently brought in this quarter. This is not adding to this position at all. And we also know that Li Lu is good friends with Charlie Munger. And arguably, you could say that Li Lu is one of the world's best value investors. So he wouldn't be buying into Berkshire Hathaway unless he thought it was trading below what it was intrinsically worth. Well, that's just sort of my take on it anyway. But I'd love to hear from you guys. What's your sort of take on these most recent news out of Li Lu buying into Berkshire Hathaway and the amount of money that Buffett's been putting to work back into Berkshire Hathaway? Pretty interesting, I feel. Anyway, guys, like I said, I'd love to hear from you guys what your thoughts are on this. Drop in the comments below what your sort of take is on it. With that said, if you did enjoy today's video, please do us a favor, hit that like button, helps me out a ton, helps push these videos out a bit further. And if you're new here, please consider hitting that subscribe button, that way you can stay up to date when the next video drops. Till next time, stay safe, and we'll catch you in the next video. Cheers, guys.